Hi guys, Thursday the 9th of May, just gone 7:45 here in London. I think going to have to start by saying congratulations to Tottenham Hotspur I can only describe it as unbelievable, the last 2 days of football, and they're showing exactly the same fighting spirit Theresa May is doing, and it not wanting to leave Europe. I'm just beyond jealous, to be honest, and not looking forward to when head of trading Piers Curran gets into the office, although he did promise last night that we're all off to Madrid for the final, so hopefully he sticks to that. Just having a look at the chart before we have a look over yesterday and the headlines. Worth keeping an eye for those that are interested on the DAX at the moment. You can see here just testing its lower level of the day. A bit of support found around here from yesterday as well, but just sentiment, from walking into the office and having a little read around of the headlines, stocks do feel a bit negative in terms of the sentiment from overnight, so just keeping an eye on this potential trend line. We had a bit of support just a couple of moments ago, and you can see that's still holding for now, but if that was to go, especially the way the markets have been acting lately, you could get a further follow through, and in turn you can see the S&P not so respected on this trend line. On the breakthrough it did hold, however, and they're near those lows. That low from what day is it, Thursday, Tuesday, holding very well for stocks, and we'll have a look over at charts later on, but you can just see again how important that whole technical point is. Going back to the 21st of March, that's still holding firm. So keeping an eye on the DAX to see how that reacts around this low, if that was to really get a breakthrough, and of course with the volume picking up on that open around 8 a.m, so in 12 minutes time you might start to get a follow through elsewhere as well. Quick overview of yesterday. To be honest, from market opportunity wise, there wasn't a lot going on. I would say the pound we'll come on to in a moment. There was a couple of negative headlines, but Theresa May came out fighting again, and it didn't do too much other than that first initial sort of push lower. Then you can see it range for the remainder of the session. The euro, couple of half decent opportunities from shorting up at the high of the day just before that R1, but again very small range, not offering too much there. We had the DOEs yesterday afternoon, 3:30 usual slot, and that came in a surprise draw. Remember, the build on Tuesday was the surprise. You had the reverse of that, a drawdown of nearly 4 million, and we did push higher, but again small range for oil there, only a dollar and, well, not even $1.50 at bottom to top. Quite interesting to keep an eye on this correlation with oil, and I tweeted yesterday, but it's not a surprise to anyone to be aware of the correlation between oil and US equity markets. You can see here, this is the S&P and oil, so oil being the blue and the yellow candles, the S&P being your normal green and red, both peaking same sort of time, 2nd of October, or just before for the S&P as well, on that sort of double top that it made. Boxing Day being that low. Now you could argue that oil was just given the wink not too long ago on the 23rd of April that we were starting to drift lower, and in turn the S&P has started to follow through as well, and you can see just that tightness of correlation. While it maybe broke down a touch in that the S&P pushed on a lot further and quicker than oil did, you can still see just the direction of oil through that for both of those. So keeping an eye on that. It might be that if you are looking for a buy the dip opportunity in equities, you might want to see oil really find support and push higher, and you can use that as a place where, if you were to look at oil, if I just bring up a chart, it might be just looking at the back end of the week, where does oil finish? Can we get, say, back above $63? You can see we found really strong resistance there on the 6th and the low of the 1st, and was also a really key level back on the 2nd. If we were to push back above that on Friday and close, that might be an opportunity to identify an area in the S&P to get in as well. that correlation, obviously, one to really keep an eye on. Really good, obviously, you can see just how good that is for the S&P, but I mean, one here, I think someone must have put this on the charts yesterday after I had a look as well and changed it to the Dow Jones, and you can see just how close that is. I mean, that is incredible. Makes it look like it is exactly the same chart, both peaking and bottoming out in the same day, and also with those highs as well, but a lot closer, followed there. Usually the S&P is going to be the one, due to the energy sector, that's going to move the most, but you can see Dow Jones there following it very, very closely. One to keep an eye on. Other than that, yesterday with those DOEs that we talked about, not too much happening. Stocks were mixed overall. You had some positive headlines, some negative headlines. You had an algo move off a sarcastic tweet only to snap back. But other than that, relatively quiet. I suppose the biggest sort of mover of the day would have been gold, which did push higher in the morning, only to come back down. And this is a really key level here in, well, it's a lot messier here. Let me just clear this up for gold. And the reason why we had such a decent push lower from that level, well, you can see just the importance of this all year, going back to early January. We then broke and closed through on the 16th of April. The couple of times we've come back to this level has offered a really, really strong opportunity to have got short. Now, we've also had this double bottom, so into this interesting range now for gold. And like I said, we'll come on to these charts in a bit more intraday focus at the back end of the briefing. But you can just see the importance of this level. Now, if you are interested in getting long, break of this trend line and 1290, or if you want that short, this is also the 50% Fibonacci level from last year's low. If I just put that on, and also the current low, the double bottom from here, but also the high back in 7th of December. So really key level and decision time for gold. But yep, yesterday that would have been a good opportunity to have got short around that area as it came back down to test this trend line, which has been drawn on and holding again today. Speaking of trend lines, just out the corner of my eye, just starting to see the S&P push lower towards its low of the day, and you've got to imagine that in turn the DAX is just starting to pick up a touch, and you can see still on its low. So one to keep an eye on, especially as we're now just 6 minutes away from the open, and the volume will start to increase as well. Headline wise, if we have a quick look over, and it's again a case of nothing really new to report, more just reiterating the general sentiment of the markets, that stocks are just a bit edgy over the trade talks, what's going on there, and are the US gonna impose these new tariffs on Friday from 10% to 25%? That's going to be the main focus for the next couple of days. I reiterate what Anthony said yesterday, that it's probably just a case of this. It is going to get sorted. Understandably, there's a bit of a pause, and I'm surprised it's taken him this long to go all gung-ho, and he's got a lot of room to work with the equity market, which we know he cares about so much from a sort of presidential run-in point of view, and he's just seen the impact that the negative headlines can do, but he's also seen how positive they are when they come in. And even yesterday when you had talks that it's all going to get sorted from Trump, despite China not playing fair, the stock markets, especially in the US, jumped higher. So they're still going to be moving off these headlines, but it might just be that we've got going to come lower for the next sort of couple of days. And I do feel today, give or take, if there was no new headlines, would be a day where we'd see markets come under pressure. Quite a good article I saw here from the BBC. I'll post this in the chat room now for everyone to sort of have a look over, just to bring us up to date with the trade war, or trade talks, I should say, in charts here, so you can see just the trade deficit over time, how that has grown so far. And of course, going into one of the points Trump made yesterday was his reasoning for perhaps why China are playing a bit hardball here is that they want to potentially go into negotiations with Joe Biden or another weak Democratic nominee. His words, not mine. Especially going into the election, he'll want to, next year of course, but into the run-in, he'll want to get this sorted. And I think any hardball from China or the US is going to be short-lived, and there will be some good opportunities to get back into these equity markets again. You can see here just a list of what the tariffs have been imposed of, and this point here about the vow to slap 25% on another 325 billion of Chinese goods. So that's expected to be on Friday because the talks are going slowly. So any talk of that, is that going to happen, is that not going to happen, is something to keep an ear to the ground on. The new products that could be affected, you can see telecommunications would be the most hit there, in computer circuit boards higher up there as well. So good little graphic to keep an eye on, especially if you're interested in trading specific stocks as well. How has the trade war hit the markets? Well, we know as we look at the S&P every single day, but Asian stocks which are in oversold territory at the moment, a couple of them, you can see just having a look here at the free markets, the Dow Jones, which is pretty much it's only a few percent above where the trade war started at the beginning of 2018. The Hang Seng, despite a decent recovery at the beginning of this year, along with the Shanghai Composite as well, is now just starting to tick lower as these talks seem to loom and not progress as both parties may want as well. Recently, we've had trade talks between Europe and the US, and the US and Japan, which all things considered went relatively well. But you have had the downgrade for growth. I think the second one or the third one in 6 months not long ago, and you'll start to get these kind of headlines again running through. Stock markets down, China's yuan tumbles lowest since January, trade war fear. And I think you've got to roll with that for the next couple of days, that the markets will just have a bit of a pause, and there is still areas of interest below where we could find support, but the next couple of days I think we will drift lower. And looking at the charts once again on the S&P, as this is the chart I have open, an area I would like the look of if we can get down there. I know we've run through this before, but just for the purpose of going through it again, can we, if we were to get back to sort of, and this is the futures here, around 29.30, 28.30, I should say 28.10, I would really like this level as an area to get in. Should we find support for that push higher around with the 2800 handle, I think the risk reward would make quite nice sense back up towards those highs, which I think we will see again, albeit this market just coming under a bit of pressure. Well, from that intraday point of view, keep an eye on this current low from the week, but also because the high of that 21st of March, as mentioned as well. Going back to the headlines, but overnight we had some Chinese data which was mixed overall, to be honest. The CPI in line, the PPI a beat, but the new loans were down. And we've also got later on this afternoon, we've got the trade, the US trade numbers out in the afternoon. I'll just confirm that time. Trade balance, 130, which would be worth keeping an eye on, especially as we come into the back end of the week, and these numbers, are they better or worse for the US economy as a whole? Trump has been tweeting plenty about how, despite the trade talks, how they're not at their final destination, and that is coming along, that the US is obviously doing a lot better than China is, and that's proven perhaps by the stock markets in the US outperforming quite considerably. Just to bring into the picture again that DAX, because I know the time of 8 o'clock has just ticked, and we have got a break now of that trend line. So worth keeping an eye on this, how we can sort of close the next 5 minutes below that as well, and the follow through that it's going to have for other stock markets, with the S&P now pushing to its low of the day as well. So potentially things starting to get slightly interesting after a pretty slow day, to be honest, yesterday. Just to go over some more of those headlines. Again, Trump says China broke the deal in trade talks. So we saw him tweeting about this, and they broke the deal, Trump said at a campaign rally Wednesday in Florida, which is leading him to raise tariffs. The president noted that top Chinese negotiator, he was traveling to Washington for further talks. Good man, Trump said, but they broke the deal. So he's playing, this hard man. It's classic Trump, isn't it? I think the only surprise is that it's this year, 2019, that it's taken him until the 9th of May to really get stuck in and go from it here. I saw a couple of interesting tweets not long ago suggesting that the deal has been on the table plenty of times, but he keeps coming back and trying to push for more. The tweet suggesting it was almost like a child. But I am of the belief that we will get a deal done, and when that comes through, I do think there's still a bit left in the stock market to push on. And on the flip side, the dovish Fed, albeit their last central bank meeting, they were perhaps more hawkish than expected. They're not looking to raise rates anytime soon, and I do think there's more reasons that these markets will eventually go higher than not. Just might be that with oil coming down and the negative headlines on trade, that be put on pause for a while. Just to reiterate that point, Trump said, or the US said, it would raise tariffs on 200 billion of Chinese goods to 25% from that 10% on Friday. Obviously, the market move really started on Sunday, follow through on Monday, following the Trump tweets and wiping considerable amounts of dollar value of global equities. But yeah, he's saying all this, but he's also mentioning whatever happens. Don't worry about it. It will work out. It always does, and that's how I would really roll with it. Albeit maybe the next couple of days will be more negative. But if you don't follow Donald Trump in this day and age, and you're intraday trading, it's a necessity. He moves markets whether you like it or not, and I know many people do sit on both ends of the spectrum there. Just having a look at the calendar for the morning. Obviously, with stocks just moving lower here, that will be the focus. But other than that, it's going to be quiet on the data front really until we get into the back end of the session. We have some US numbers out at 1:30, along with that trade balance, the PPI final demand. Into the latter part of the European session, you have some wholesales, inventory and sales data out at 3 o'clock. We have a decent amount of speakers. You've got ECB's Lane, which should be on the wires any moment. We'll keep an eye out to see if they were to come out and say anything more hawkish in nature. Fed's Powell speaking, or Jerome Powell speaking at 1:30, and then a couple of speakers into the back end as well to keep an eye on. But not expecting too much in the way of these figures to really drive price. Yesterday, just to wrap up what happened, you did have the Peston tweet, who, he's been relatively quiet recently. I think that's been the case for Brexit talks. You'd be forgiven for thinking Theresa May and Jeremy Corbyn were still even in negotiations. It's gone that quiet. But he was tweeting, and this one here, Labour talks with government on a formal Brexit compromise are very close to being terminated. This was reported by the Squawk, and it was getting a bit of coverage on Twitter and the pound yesterday. If I just bring in the charts here, it was pushing lower at the time. Whether you want to really put it down to that or not, I think is up for debate. We're currently trading on what has been a very, very key level this year historically. Just looking at this on that longer term, whether we close above or below this whole area is key. Again, you can see good support around 130 on futures, 20, 40 just as a zone, massively important. Can we find support here and push higher, then next thing you know, 132 starts to get talked again. But if we were to close below here, I think, and I saw people on the briefing yesterday on the comments talking about 129. on the pound. And I think if we do close below that, we would get that relatively quickly as well. So big level for the pound to keep an eye on. But those comments from yesterday not helping the cause. However, Theresa May was fighting her battle yesterday, rejecting calls to resign. We also saw a couple of days ago a tweet doing the rumour mill that Theresa May was going to resign. I know Ant talked about it yesterday, and I don't think really people bought into it at all. But it was interesting to see, and I put the question to the chat room. We were talking about what the reaction would be, and there were some that saw it as a buying opportunity, some saw it as a selling opportunity. I think it would be initially the indecision that markets hate would see it come lower. But just who would replace her would lead to that opportunity where you might see stocks really push on, not stocks there, the pound push on from there as well. Here was the article. I'll put this in the chat as well for those that haven't read it. It was more of an opinion piece than necessarily a definite headline, as talks really have gone silent for now. Just to wrap up on the chart, on the calendar before having a look at the charts, you can see, again, just to reiterate, quiet morning, bit of data in the afternoon, but I wouldn't be getting too excited about any of these releases to be the main driver for the day. If we have a quick look over the charts now, and I think good place to start, considering we've had that 5-minute close, will be on the DAX. If we just bring this in, you can see it snap back. Let's put the pivots on and this trend line. We did get that break to the S1 level. Let's just have a look where this trend line comes in again as it's disappeared off my chart. So be keeping an eye on that previous low of the day. Got quite a good push down there off that, and in turn that is obviously going to help US stocks push lower as well. If the DAX was to confirm a breakthrough here, I'd be keeping an eye on this low that we had from yesterday, and then the key one from the beginning of the week. And like I said, I think the sentiment today is going to be lower. If stocks push lower in the US, what levels to be aware of? Well, obviously the low that we had of the week, but more importantly, can we get a close below there? It was the high of the 21st of March. The Nasdaq didn't quite make that level as we were. Well, if I was to put this on the daily chart here, it didn't quite make that level at the beginning of the week from the 21st, 22nd of March, but it's now not too far away as we're testing the low and actually had a little break through there. So stocks starting to get a bit interesting. Your safe haven, so we have a look at T-notes, has pushed higher slightly this morning. Gold almost flirting with safe haven territory again on Monday and Tuesday, only to come back lower yesterday as the dollar perhaps strengthened a bit, but that is higher this morning as well. The yen, after Golden Week, where it probably was best to leave alone, you have seen in the last couple of days, and this is yen against the dollar rather than dollar yen, you have seen it push higher, and again it's on those current highs of the week. So clear risk off in the market. Having a look at the currencies intraday, is there opportunity for euro? I'd say while it's in this range, the higher area to look for go for a short, I should say, is not a bad opportunity. As with the euro, if looking for that continuation lower, I'd probably always look to see, can you get a decent trend line on and a break of that and close below to look to go short would be the favoured opportunity there. Aussie dollar continuing its push lower since yesterday morning, and the negative trade talks will not help this pair, and that low that we've got, you can see from the beginning of the 6th, so the beginning of the week, that's just been tested again now. I've just seen a tweet just to wrap things up. Ajax shares are down 21%, which is incredible. So yeah, what a way to finish the week would be for Arsenal and Chelsea to also get into their finals. I'm not going to hold my breath being an Arsenal fan, especially considering the recent bit of form. But it does seem that the stocks are red today, so hopefully London will be red again later on. Any questions, as usual, please do let me know. I'll be on the be on the chat throughout the day. But I hope you all have a great trading day.